Saul. It is 1:17 a.m. on Monday, August 22nd, 2011, and this video is analysis of the euro currency. A couple of weeks back, I wrote a blog post that has since become my most popular one, which is there is a monster move brewing in the euro. So since I posted that, I've gotten some emails and some messages, and people want to know if I still have that opinion and if I could elaborate on the blog post. And then finally, on Friday the 19th, I said, you know what, I'm going to do a video and go over exactly what I'm looking at. Now, first things first, this analysis is technical in nature, purely technical. I'm not going to talk about what's going on over in Europe, what country is going to make it, what country is going to go under. I don't touch on any of that in this video. This is purely technical in nature, so please do your own research on that other stuff. It's good stuff to know, okay? And you can explain it to me too, right? Send me a video. But seriously, I'm not going to touch on any of that. All right, so let's go over this chart before we start doing the analysis. This is an open, high, low, close bar chart with Keltner channels, a 20-period Keltner channel spread at 2.5 ATRs up and down, kind of like Bollinger Bands, except Bollinger Bands use standard deviation rather than average true range. I have nothing against Bollinger Bands. I think John Bollinger is brilliant. I love the Bollinger Bands. I'm just using Keltner channels here. All right, this is a 14-period ADX and a 14-period RSI, both invented by Wells Wilder. The RSI is just a momentum oscillator. You can use whatever your particular brand of vodka that you enjoy using on your chart. I just threw the RSI up here, and you don't even have to use one if you don't want to. Okay, so let's talk about the ADX a little bit. I use the ADX for a measure of volatility. All right, so how the ADX works is basically it's scaled from 0 to 100, and the higher the reading, okay, above 25, some say above 30, a higher the reading, if the ADX is moving higher, that's suggesting that there's a strong directional trend in the market that you're measuring. If it's falling, it's saying that the market that you're measuring is choppy, or could even be range bound if it continues to trade lower. Now, some people say as long as the ADX is moving lower, it's choppy, and if it gets below certain levels like 25 or 20, then it gets really a real sign of consolidation. Now, me personally, I like to look for readings of 15 or lower, and I pay a special attention to readings below 10. All right. Now, the setup that I see in the euro takes advantage of one of the most predictable and powerful cycles in the market. All right. Now, the euro's only been trading, 12 years, whatever it is. But, this goes back in the financial markets. This goes back in the stock market, okay, for well over 100 years, okay? The volatility cycle is, Sheldon Nannenberg said it in his book, Options, Pricing, and Volatility, that volatility is mean reverting, okay? So periods of low volatility are followed by periods of high volatility, and periods of high volatility are followed by periods of low volatility. Now, on the one side of the cycle, when volatility gets high, okay, and we're looking for it to revert back, that's when option sellers like to step in and they like to sell premium when volatility is high, all right? Now, I've always had the issue of timing when that high volatility is going to subside. And look, fortunes have been made playing that side of the cycle, okay? There have been a lot of people, a lot of option sellers to sell premium that have made a fortune. Unfortunately, there have also been fortunes lost trading that side because people, time it wrong. They say, okay, the volatility is where it was 2 years ago, 3 years ago, whatever, and this is when it reversed, and they load the boat, and the volatility keeps expanding, and, they're now short premium, and it just, absolutely, cracks them. All right, so it can go both ways. All right, and I've never had a good handle on timing when that high volatility reverts back. Okay, that's just me personally. Now, on the other side of the cycle is the low volatility or the low range contraction. Okay, when range gets nice and contracted and tight, when that reverts to expansion. Now, there are some benefits of trading that part of the cycle. Okay, the first one is that your risk can be very low. Look, you still need a good money management plan. I'm not saying it's a lock or like any of these moron super gurus sit there and tell you that this certain trend is a lock. It's ridiculous, okay? If you go crazy and you load the boat, all right, you expose yourself to great risk. But the beauty of a low contraction model that leads to expansion is that you don't have to risk a lot because your risk-reward ratio is so great in your favor. If you're correct, you have the chance to really participate in a great move. On the other side of the cycle, if you're selling premium, well, I mean, all you could participate in is the downside of that premium. And look, like I said, there's nothing wrong with that if you can figure out the timing, but you have a lot of exposure to the upside. All right. So this part of the cycle, of that volatility cycle, can be very, very powerful because, like I said, you can wind up risking very little to possibly participate in a nice, strong, dynamic move. So let's talk a little bit more about this monthly chart here. You can see the ADX is above 15, right, but just barely. It's still pretty low at 1537, but this isn't how I found this setup. I actually found it on a weekly chart, which we'll get to in a little bit. Now, the range for the last 3+ years is basically here to here, okay? And this orange line is just about 50% of this range, maybe off by a couple of ticks. So you can see we're not really that far above the midway of this range. Now, a lot of people look at this and say, okay, this is a bull flag. It's not a bull flag, okay? This is a range. Flags cannot exist in a range. This is a windup. This is a contraction in volatility. So there is no directional bias here. Okay, we're not going to sit here and go, whoa, we're above the moving average, so that means we're going to go higher. Or, whoa, maybe we're not going to go higher because it'll fake it out. There's no reason to try to guess. The beauty of this cycle and the beauty of this setup is that you can wait for the market to tip its hand. You can see if you're right, when you buy a breakout or sell a breakdown. And then if you're proven right, you can add to the position. Okay, that's the beauty of this kind of setup because you don't have to load the boat, but there's no reason that once you're making money that you can't add to the position as long as it's going in your way. All right, so this is what the monthly chart is basically saying, that we're ready to move one way or the other. The weekly chart, okay, if we pull up the weekly chart, and it's for some reason the lines get screwed up here, but you can see a little different pattern, but it's in the same spirit. And you can see here that we have a triangle or a coil more than a triangle because there's really not a lot of swings existing between the lines. Okay, it's pretty tight action here. And look at the ADX, under 15 and headed for under 10. As a matter of fact, if it stays choppy for another week, it may fall to under 10. Okay, let's see what it closed at the week before. So you can see 11:59. It's already opening at 10:77. We're only a couple hours into the new session for the week. So this is saying that a really nice wind-up is forming here. You can see the RSI is right in the middle, right about 50. That's not really telling us anything here. But the ADX is telling us, hey, get ready for a move. So let's look at some of the other times when the weekly ADX got under 10. Back here it got just about 10, right? It didn't quite get under, but it was still low. I mean, 10 is 10.06 or whatever it is still pretty low. And you saw a really nice move there. Okay, it's a pretty nice move. And then if you go back a little bit further, you see here the ADX dips under 10, stays there, and look at this beautiful pattern that forms. Kind of looks a little familiar here. And then look at the size of the move that happened out of this pattern. I mean, just a giant move. Down here, we were at 88.43 or so. I mean, if you want to run, here's 89.20, right? It went up to, 13.66, or not even, right? It went up to 13, wow, it went up to more than that. It went up to 13.660, sorry. Okay? So, it was a pretty big move there. Now, are you going to catch this whole move? I don't know. But, I mean, there's a lot of swings here. I mean, this is a big move here. All right? And listen, I'm not saying that the move that's going to come out of this pattern that we're currently set up is going to look anything like that. Okay? But it doesn't have to. I mean, the first targets out of sitting here on the Keltner channel, the midline of the Keltner channel, would be if we break up the top Keltner and if we break down the bottom Keltner. That's still a pretty nice move. And if this leads to a directionally trending move, well, the highs are, just, a couple of nice big weeks above. and the lows a little bit more, below this lower Keltner, but there are other levels to watch down here, and even back to the top of this consolidation here. So there's a lot of potential. There's a lot of air, right, between the other side of these bands and the next support or resistance line. So, I don't know if it's going to be a big move. To me, the technicals definitely suggest that a big move is brewing here. Several months of wind up here. And, you want to talk about the fundamental triggers, that's fine. But to me, it's, just on the technical side. So, all right, now let's talk about how you set up a trade on this. Well, this is the strategy, okay? The strategy is that we're in a low volatility situation, a low ADX situation, and that we're looking to take advantage of range expansion. So it's now up to you, okay, to come up with the tactics that you need in order to take advantage of this. Are you looking to buy a break or short a break, or are you looking to wait for the break and then a pullback, or wait for a break and then a rally up? Are you looking to go to a lower time frame, such as the daily or the 240-minute or the 120-minute chart, and watch for when we bang up against resistance and use those time frames in order to box your entry, right? So you can get in as tight as you can, because remember, you're using a weekly chart here. So the stop would be wide if you're going on weekly bars, right? So you're going to have to dial down to a smaller time frame in order to quantify your risk and in order to justify participating in this type of move, okay? Because obviously the weekly ranges can be so big here that you may not be able to withstand the risk that you would have to put on if you just use the weekly chart. So that's all that's all trading really is looking for a setup on one time frame, and if it's not, if you can go smaller, which you usually can, looking for that smaller time frame in order to get your risk down as low as possible. So I hope you enjoyed this video. Keep your eye out for a move on the euro. Feel free to contact me at the email that you see at the beginning of this video, and let me know if you think this video sucked, if you thought it was good, if you think I'm a nice guy, if you think I'm a jerk. It's okay. And have a great I'm saying have a great trading week, but I don't know when you're going to be watching this. But whenever you watch this, have a great trading day, whatever your next day of trading is, and a great rest of your trading career. And I will talk to you again soon.